So Donald Trump just promised Americans that seizing Venezuela's oil would be an economic windfall, that U.S. companies would invest billions and get reimbursed from oil revenues, and that this whole operation would basically pay for itself. It's honestly hard to believe he thought anyone would buy that fantasy, because here's what's actually happening. Trump just committed the United States to a military occupation, could cost hundreds of billions of dollars, triggered a trade war with China that's threatening critical supply chains, created a diesel shortage that's about to spike inflation, and set up American taxpayers to fund the reconstruction of an entire country's infrastructure while oil companies pocket the profits. This isn't just bad economics. We're talking about an economic disaster that could rival the worst foreign policy blunders in American history, and it's just getting started. Let me fill you in on what Trump actually promised versus what's really happening. On Saturday, January 3rd, after announcing that U.S. forces had captured Venezuelan President Nicolas Maduro, Trump stood at Mar-a-Lago and painted this rosy economic picture. He said, we're going to have our very large United States oil companies, the biggest anywhere in the world, go in and spend billions of dollars to fix Venezuela's badly broken infrastructure. According to Trump, these companies will be reimbursed for what they're doing, and Venezuela's massive oil reserves will start flowing again, generating revenue that covers everything. Trump emphasized that Venezuela has 303 billion barrels of proven oil reserves, the largest in the world, about 17% of global reserves. He claimed this was all about getting that oil flowing properly, making money for Venezuela, and benefiting American interests. The whole operation was framed as a smart business deal where American expertise rebuilds Venezuelan production and everyone wins. But here's where the rubber meets the road. Trump also announced that the United States is going to run Venezuela until a safe, proper, and judicious transition can occur. He's talking about American officials governing an entire country, managing its transition, and overseeing this massive reconstruction project. That's not a quick in and out operation. That's nation building on a scale we haven't attempted since Iraq and Afghanistan. Now, this isn't the first time we've seen Trump promise economic miracles from foreign adventures. His pattern of overpromising financial benefits while understating costs and complexity is well established. We've spotted this approach time and time again. Just think about how he claimed Mexico would pay for the border wall, that tariffs on China would generate massive revenue without hurting Americans, that his tax cuts would pay for themselves through economic growth. In every case, the promised economic benefits either never materialized or came with massive hidden costs that taxpayers ended up covering. The border wall, American taxpayers funded it. The China tariffs, American consumers and businesses paid higher prices. And the tax cuts exploded the deficit by nearly $2 trillion. Then there was his promise that sanctions and pressure on Venezuela during his first term would quickly collapse the Maduro regime without costing America anything. Trump imposed maximum pressure sanctions starting in 2017, froze Venezuelan assets, banned Americans from doing business there, and predicted Maduro would fall within months. Instead, the regime survived for years. China and Russia stepped in to fill the void, and American companies lost access to critical heavy crude oil that Gulf Coast refineries desperately needed. And let's not forget his promises about Afghanistan withdrawal being clean and simple, about North Korea denuclearization being easily achieved, about trade wars being good and easy to win. Each time, Trump claimed his approach would deliver quick victories and economic benefits. Each time, the reality proved far more complicated and expensive than advertised. Even his promises about Middle East peace and Iranian pressure have followed this pattern. Trump pulled out of the Iran nuclear deal, claiming his maximum pressure campaign would force a better agreement and cost nothing. Years later, Iran is closer to nuclear weapons capability. Regional tensions have escalated, and the United States spent billions on military deployments and responses. The promised economic breakthrough never happened. Now, it looks like Venezuela is shaping up to be the biggest example yet of Trump's economic magical thinking colliding with brutal reality. This pattern is becoming impossible to ignore. Trump makes bold declarations about easy victories and massive profits. Supporters take him at his word. And then American taxpayers get stuck with the bill when his promises fall apart. So what's the actual economic situation Trump just created? Well, it all boils down to a catastrophic miscalculation of costs, timelines, and economic risk. The reality emerging from expert analysis is devastating for Trump's rosy scenario. First, the infrastructure costs are absolutely staggering. Francisco Minaldi, director of the Latin America Energy Program at Rice University, told multiple news outlets that rebuilding Venezuela's oil infrastructure to peak production levels would require more than $100 billion in investment and take at least a decade. Let me repeat that, more than $100 billion over 10 years minimum. Venezuelan state oil company, PDVSA, has estimated that even just updating pipelines that haven't been maintained in 50 years would cost $58 billion alone. These aren't small numbers that oil companies will happily absorb and wait years to recoup. Patrick DeHayen, lead petroleum analyst at GasBuddy, pointed out that Venezuela's oil infrastructure has been decaying for many years and will take enormous time and money to rebuild. The facilities are rotted, dangerous to operate, and require specialized equipment for the heavy, sour crude that Venezuela produces. But here's where things get really problematic. Major oil companies are extremely hesitant to invest anything close to those amounts in Venezuela because they've been burned before. In 2007, Venezuelan President Hugo Chavez forcefully renegotiated contracts with international oil companies and essentially nationalized their operations. Exxon, Mobil, and ConocoPhillips both left the country entirely. International arbitration courts later ordered Venezuela to pay ConocoPhillips over $10 billion and ExxonMobil over $1 billion in compensation. Venezuela has paid back only a fraction of those awards. Gerald Kepes, president of Competitive Energy Strategies, noted that even Chevron, the only U.S. major that stayed in Venezuela, didn't like the terms they were forced to accept. They remained because they had sunk costs and hoped for eventual improvement, but they certainly didn't increase investment under those conditions. Now Trump expects these same companies to pour tens of billions into a country where they previously had their assets stolen. The timing couldn't be worse for attracting that kind of investment either. Oil prices are below $60 a barrel, having dropped 20% in 2025. Long-term projections for oil demand are increasingly uncertain as the world shifts toward electric vehicles and renewable energy. Bob McNally of Rabidan Energy Group raised the fundamental question that oil executives are asking. Does the world even need that much additional oil capacity in an era of climate policy and declining demand growth? The immediate market reaction told the story. When oil trading resumed Sunday evening, prices swung wildly and then ended up slightly lower. Investors are pricing in years of uncertainty, potential supply disruptions, and massive geopolitical risk. This isn't the bullish reaction you'd expect if markets believed Trump's promises about abundant, cheap oil flooding global markets. Meanwhile, Trump has created an immediate diesel crisis that's about to hammer American consumers and businesses. Venezuela produces heavy crude oil that's specifically suited for making diesel fuel, asphalt, and other heavy products. The Atlantic Council released analysis showing that removing Venezuela's oil from global markets could push up diesel costs in the US and boost inflation significantly. Most US Gulf Coast refineries were built to process exactly this type of heavy Venezuelan crude, and they operate much less efficiently when forced to use lighter American oil. Diesel isn't some niche product, it's the backbone of American commerce. Trucking companies use diesel to transport goods across the country. Construction equipment runs on diesel. Farming operations depend on diesel for tractors and harvesters. Manufacturing plants use diesel-powered generators and equipment. When diesel prices spike, those costs ripple through the entire economy, pushing up prices on everything from food to building materials to consumer goods. The trade war Trump just triggered with China compounds these economic problems exponentially. China has been Venezuela's largest oil customer, taking roughly 80% of Venezuelan exports. About 600,000 barrels per day in December 2025, that represents 4% of China's total oil imports. Beijing has also extended over $60 billion in loans to Venezuela since 2007, making Venezuela China's largest debtor in Latin America. Trump's operation essentially cuts off China's access to an energy supplier it spent 2 decades cultivating. Just hours before Maduro's capture, he met with Chinese officials at the presidential palace. The timing was a deliberate message to Beijing about American dominance in the hemisphere. China's foreign ministry responded with harsh condemnation, calling the U.S. actions hegemonic and a violation of international law and Venezuelan sovereignty. But China isn't going to just accept this economic hit quietly. Beijing has already demonstrated its willingness to use economic pressure in response to actions it views as threatening its interests. The Trump administration sanctioned 4 Chinese companies and 4 oil tankers with Venezuela connections just days before the invasion. China is certain to retaliate with its own economic measures targeting American businesses, agricultural exports, and strategic industries. We're talking about potential Chinese tariffs on U.S. goods, restrictions on rare earth exports that American technology companies depend on, and regulatory obstacles for American firms operating in China. The last trade war between Trump and China cost the American economy hundreds of billions and required massive taxpayer-funded bailouts to farmers. This new confrontation over Venezuela threatens to be even more damaging because it combines trade issues with national security tensions. Russia is also positioned to make this economically painful for the United States. Russia formalized its alignment with Venezuela through a strategic partnership treaty signed in May 2025, covering defense, energy, and sanctions evasion. Moscow loses a strategic partner and faces pressure on oil prices if Venezuelan production increases under U.S. control. Russia has already condemned the U.S. action as armed aggression, and can be expected to work with China to create economic headaches for American interests globally. Then there's the staggering cost of actually occupying and governing Venezuela. Trump casually announced that the United States will run the country until a proper transition occurs, but he provided zero details about what that means operationally or financially. The United States has some painful recent experience with nation-building costs. The wars in Iraq and Afghanistan cost American taxpayers over $7 trillion, according to Brown University's Costs of War project, and those operations showed that the costs always exceed initial estimates by orders of magnitude. Even if Venezuela requires only a fraction of what Iraq and Afghanistan cost, we're still talking about hundreds of billions in military occupation expenses, reconstruction aid, governance support, security operations, and everything else involved in running another country. Trump has 15,000 troops already deployed to the region. Maintaining that force presence costs millions per day. Add in the costs of actually governing Venezuela, providing security, rebuilding institutions, managing the transition, and responding to inevitable unrest or resistance, and the price tag explodes. Congressional budget analysts haven't even begun estimating these costs because Trump launched the operation without congressional authorization or consultation. There's no funding mechanism in place. This means either deficit spending that adds to the national debt, or Congress will have to pass supplemental appropriations bills to fund the occupation. Either way, American taxpayers are on the hook for costs that could easily exceed $100 billion over the next several years. And here's the cruelest irony. While taxpayers fund this disaster, American oil companies will structure any deals to minimize their risk and maximize their profit. Trump claimed the companies will be reimbursed from Venezuelan oil revenues, but that assumes Venezuela can quickly return to profitable production levels. In reality, it will take years before those oil fields generate significant revenue, and during that time, someone has to cover the upfront costs. Oil industry experts are already noting that companies will demand extremely favorable contract terms, tax breaks, legal protections, and risk guarantees before investing major capital. They'll want assurances that Venezuela won't nationalize their operations again, that they'll have priority claim on revenues, and that U.S. military force will protect their assets. Those kinds of sweetheart deals mean oil companies profit while Venezuelans and American taxpayers bear the risks and costs. These specific concerns from energy companies are revealing. When reporters reached out to ExxonMobil and ConocoPhillips for comment on Trump's announcement, the companies either declined to respond or issued extremely cautious non-committal statements. ConocoPhillips spokesperson Dennis Nuss told media that the company is merely monitoring developments and their potential implications. That's corporate speak for we're skeptical and not committing to anything. These are the same companies that lost tens of billions when Venezuela nationalized their operations 2 decades ago. They haven't forgotten. Chevron, the only major U.S. oil company still operating in Venezuela under special license, has been extremely limited in its activities. They've been producing only about 140,000 barrels per day as of late 2025, a fraction of what they could potentially produce if they felt confident about investment security. The fact that Chevron has maintained such minimal operations despite having infrastructure in place tells you everything about their risk assessment. If Chevron, with boots on the ground and existing relationships, isn't scaling up dramatically, why would other companies rush in? The production timelines make the economics even worse. Energy consultants estimate it would take 5 to 7 years of sustained investment before Venezuelan production could return to even 2 million barrels per day, still well below its historic peak of 3.5 million. During those 5 to 7 years, companies are spending billions with minimal revenue. Payback period stretches to 15 or 20 years in best case scenarios. That's a terrible return on investment in an industry facing long-term demand uncertainty from electric vehicle adoption and renewable energy competition. Corporate executives are also deeply concerned about the political stability required for long-term investment. David Goldwyn, former top State Department energy official, told CNBC that everything we're part they learned from government transitions in Iraq, Afghanistan, and elsewhere is that transitions are hard. Companies won't commit tens of billions without confidence in the future government structure, contract enforcement, and security environment. That confidence doesn't exist right now. The economic assumptions underlying Trump's entire plan are fantasy. He's betting that reconstruction will be cheap and fast, that oil companies will eagerly invest, that global markets will welcome massive new Venezuelan supply, that China and other adversaries will accept their losses without retaliation, and that American taxpayers won't notice the costs. Every one of those assumptions is false. So let's break down what this could mean for the American economy because it's not just a foreign policy story. It has direct consequences for inflation, employment, government spending, and household finances across the United States. First up is the inflation nightmare. The immediate impacts are already materializing. Diesel shortages and price spikes are hitting the transportation sector. According to industry analysts, when diesel costs surge, those increases flow through to consumer prices within weeks. Trucking companies raise shipping rates, airlines increase cargo fees, manufacturers pass along higher energy costs, retailers mark up products to cover transportation expenses. The result is broad-based inflation affecting groceries, consumer goods, construction materials, and essentially everything that moves through the supply chain. The Atlantic Council's analysis specifically warned that disrupting Venezuelan heavy crude supply creates inflationary pressure, just as the Federal Reserve was hoping to maintain stable prices. If inflation accelerates, the Fed faces an impossible choice: raise interest rates to cool inflation, which slows the economy and kills jobs, or keep rates steady and let inflation erode purchasing power. Either outcome is terrible for American workers and families. The trade war escalation compounds these inflationary pressures. When China retaliates with tariffs on American exports, that reduces demand for U.S. products and forces layoffs in affected industries. When China restricts exports of rare earth elements and other strategic materials, that drives up costs for American manufacturers producing everything from smartphones to electric vehicles to defense systems. When Chinese regulatory authorities create obstacles for American companies operating in China, that forces those businesses to absorb losses or raise prices domestically. We've seen this movie before. During Trump's first-term trade war with China, the Tax Foundation estimated that tariffs cost American consumers and businesses $69 billion annually and destroyed 300,000 jobs. The American Farm Bureau Federation reported that agricultural exports to China dropped by over 50%, requiring taxpayer-funded bailouts exceeding $28 billion to keep farmers afloat. This new confrontation threatens even worse economic damage because it's not just about trade policy, it's about fundamental geopolitical competition over resources and influence. Now, let's touch on what this means for government finances and deficit spending. Trump's Venezuela operation has no dedicated funding source. Congress hasn't appropriated money for occupying and governing Venezuela. The Defense Department will have to request supplemental funding, which means Congress needs to pass additional spending bills just to cover the costs Trump has already committed to. Republicans have spent years claiming to care about fiscal responsibility and deficit reduction. They criticize Democratic spending proposals as reckless and unaffordable. But now Trump has unilaterally committed the United States to what could easily become a $200 billion nation building project without any plan for how to pay for it. The hypocrisy is staggering, and the fiscal consequences are severe. Adding hundreds of billions in deficit spending at a time when interest rates remain elevated means the federal government will pay massive amounts just to service that new debt. The Congressional Budget Office has warned repeatedly that current deficit trajectories are unsustainable. Trump just made that problem exponentially worse by launching an unfunded foreign adventure. This situation shines a massive spotlight on the broken promises Trump made about economic benefits. At the heart of the issue is whether Trump can actually deliver any positive economic outcomes from this Venezuela gamble, or whether he's just committed the United States to another expensive quagmire that drains resources while delivering nothing. The founders designed our system to prevent exactly this kind of reckless executive action. They gave Congress the power of the purse specifically so presidents couldn't to unilaterally commit to expensive military operations without democratic accountability. They understood that wars and occupations are incredibly expensive and that someone has to pay for them. They wanted those decisions made deliberately, with full understanding of the costs and with public support. But Trump has completely bypassed those constitutional safeguards. He launched the operation without congressional authorization. He has no detailed plan for governance or reconstruction. He has made wild promises about economic benefits without any serious cost-benefit analysis. And now American taxpayers are stuck with the bill for whatever this operation ultimately costs. If Trump succeeds in establishing that presidents can unilaterally launch expensive military occupations without congressional approval or funding mechanisms, that fundamentally changes fiscal governance in the United States. It means the executive branch can commit unlimited resources to foreign adventures regardless of cost, and Congress is reduced to either approving supplemental funding or being accused of not supporting the troops. That's not how the Constitution is supposed to work. The implications of this case reach far beyond Venezuela in Trump's second term. It's about whether we're setting precedent that future presidents can ignore fiscal constraints and commit to unlimited foreign spending without accountability. Each time a president bypasses normal budget processes and forces Congress to fund operations after the fact, it weakens fiscal discipline. It starts making behavior that used to be completely unacceptable feel normal. Think about it. If Trump can occupy Venezuela and commit hundreds of billions without prior authorization, what's to stop the next president from doing the same elsewhere? If fiscal responsibility no longer constrains executive military action, what prevents endless deficit spending on foreign adventures? These precedents don't just disappear when Trump leaves office, they become the new baseline for how much presidents can spend unilaterally. And that's extremely dangerous for America's economic future. Fiscal sustainability requires discipline and democratic accountability. When those constraints erode and unlimited deficit spending becomes acceptable, economic stability breaks down over time. We end up with ballooning national debt, reduced fiscal space for actual national priorities like infrastructure or healthcare, and an economy increasingly burdened by debt service payments. Looking ahead to the electoral impacts, it's clear that all of this is going to create significant political fallout. We're in early 2026, with midterm elections approaching later this year. The economic narrative being set now will influence how voters evaluate Republican governance and Trump's leadership. If the story becomes one of inflation spiking, diesel prices soaring, trade wars with China costing jobs and raising prices, military occupation draining taxpayer money, and Trump's promises about economic benefits proving to be lies, that spells disaster for Republicans. Voters punish politicians for economic pain. They remember when gas prices rise, when groceries cost more, when their paychecks buy less, and when government spending explodes without visible benefits. Polling data is already showing that Americans care far more about economic issues than foreign policy adventures. Recent surveys indicate that voters prioritize inflation, cost of living, jobs, and household finances above almost everything else. Trump's Venezuela gambit addresses none of those concerns and actively makes many of them worse. That's a politically toxic combination. The contrast with Trump's campaign promises couldn't be more damaging. He ran on fixing the economy, reducing inflation, cutting wasteful spending, ending forever wars, and putting America first. Now he's created inflation through diesel shortages, committed hundreds of billions in deficit spending to occupy another country, launched a trade war with our largest trading partner, and prioritized oil company profits over American households. Every major economic promise has been broken or reversed. Independent voters and swing state moderates who gave Trump a chance based on economic concerns are going to be furious when they realize he's made their situation worse when diesel prices spike and groceries cost more. They'll remember Trump promised economic relief, not new economic burdens. When layoffs hit because of Chinese retaliation, workers will remember Trump said trade wars would bring back jobs. When tax bills come due to fund Venezuelan reconstruction, taxpayers will remember Trump promised other countries would pay. Right now, Trump isn't offering anything that helps ordinary Americans economically. He's offering a foreign occupation that drains resources, trade conflicts that raise prices and kill jobs, and broken promises about economic benefits that never materialize. That's catastrophic politics for Republicans heading into midterm elections when economic anxiety is already high. So expect Democrats to champion a message focused on responsible economic governance and ending reckless spending on foreign disasters. After watching Trump create economic chaos in Venezuela while ignoring inflation and household struggles at home, there are plenty of voters ready for leaders who will focus on domestic economic priorities instead of expensive foreign adventures that only benefit oil companies. They're promising no more deficit-busting nation-building projects, no more trade wars that hurt American workers, and consumers no more broken promises about magical economic benefits from foreign policy stunts. Just competent economic management that actually puts American families first. That message is going to resonate powerfully with voters experiencing economic pain from Trump's policies. So here's the deal. Donald Trump promised that seizing Venezuela's oil would be economically beneficial, that companies would invest and be reimbursed from oil revenues, and that American interests would be served. This isn't just false advertising. It's an economic catastrophe that could cost American taxpayers hundreds of billions of dollars, spike inflation through diesel shortages and supply chain disruptions, trigger a destructive trade war with China, and deliver no meaningful benefits to ordinary Americans while oil companies profit from sweetheart deals. If Trump's Venezuela gambit proceeds as planned, then we're basically saying fiscal responsibility doesn't matter anymore. That presidents can commit unlimited deficit spending to foreign adventures without accountability, and that American taxpayers exist to fund corporate profit taking in countries we've occupied militarily. That would mean we're stepping into a completely new economic system where government spending has no limits and democratic oversight of costs has been abolished. It's about so much more than just Venezuela. It's about whether we genuinely have responsible economic governance with meaningful fiscal constraints, or whether we've transitioned to a system where presidents can spend unlimited amounts on foreign policy adventures, and taxpayers just have to cover whatever it costs. So keep an eye on this. Diesel prices are already rising. China is preparing retaliation. Congressional budget battles are coming. Economic analysts are sounding alarms. This ride is far from over. The economic stakes have never been higher, the fiscal dangers clearer, and the potential for catastrophic outcomes more certain. We're watching in real time as Trump's magical thinking about foreign policy economics collides with brutal reality. What happens next will determine whether Americans suffer through an economic disaster created it by presidential recklessness, or whether Congress finally imposes fiscal discipline before the damage becomes irreversible.